It was a bloody Monday for all the traders today. Stock markets across the globe witnessed a massive crash. Sensex and Nifty also witnessed a fall on the back of a global sell-off. Nifty closed down 2.64% at 24,055 mark. Sensex slumped 2.74%, closing at 78,759 mark. India's Volatility Index, India VIX, was up 52%. Rupee also hit record low. Japan's Nikkei saw a massive fall, tumbling 12.4% on Monday. Dow Jones Industrial Average futures fell 444 points or 1.11%. S&P 500 futures and Nasdaq futures also fell 3% and 5.5%. Not only the stock markets but crypto also has been affected. Bitcoin fell, crashing 16% in the biggest fall since 2022. In the entire week, it fell 25% to around $51,000 mark. So now why are the markets falling today? The first reason is the fear of recession in the US. The SAM recession indicator was flashing above 0.5 mark, indicating a possibility of recession. Now this happened because US experienced a massive hiring slowdown in July this year, adding only 114,000 jobs versus 215,000 jobs monthly average last year. Unemployment has also jumped to around 4.3%, highest since October 2021. The US markets toppled on Friday, seeing the worst day since 2020. The US 10-year Treasury note fell to approximately 3.75% on Monday, reaching the lowest levels in over a year on expectations that Fed might slash interest rates more aggressively following a poor jobs data. Markets are now expecting that Fed will drop rates by 50 basis points in September. S&P 500 is 5.7% below its all-time high and Dow of 3.9%. Second is Bank of Japan's policy. On Friday, Japan's Topix index fell lowest since 2011 tsunami. Today, even Japan's Nikkei is struggling. Bank of Japan announced an unexpected rate hike last week, due to which global exchanges saw a significant correction in the last two trading sessions. Bank of Japan hiked the policy overnight call rate by 15 basis points to around 0.25% last week. Now the hike pushed the value of yen higher against the US dollar. This hurts the forex traders too, who are employing the carry trade strategy. Now carry trade strategy means that an investor borrows from a country with low interest rates and weaker currency like yen and reinvest that money into assets of another country with high rate of return. A sudden hike in interest rates spooked the investors, and there is a potential for more too. Now this sell-off in shares of US-based mega tech giants last week also could be on the account of reversal of yen carry trades as per experts. Now third is Iran-Israel tensions that are escalating. Iran, Hamas and Hezbollah have vowed to retaliate against the assassination of the Hamas chief in Iran and also the Hezbollah military chief. So any escalation in the Middle East means surging oil prices. While currently oil prices are at 8-month lows, the Middle East will be a key to watch this week. For India, a tepid Q1 show of companies was also a factor. For 30 Nifty 50 companies, there has been 0.7% year-on-year growth, but a 9.4% quarter-on-quarter decline in net profits. So what is ahead for the Indian markets? Well, experts say that Indian markets will not be majorly impacted by the global triggers because unlike the Japanese markets, Indian markets are driven by domestic flows rather than being heavily independent on the foreign money. Well, that's where we can say that we are Atmanirbhar, and well, a rate cut in US is beneficial for India and emerging markets. So rate cuts in US may drive more investments into India. FPIs have been net buyers in India in June and July. Indian economy is performing better than the global peers, making it an attractive destination for investors. So when risk-free rates will come down in the US, investors will seek better returns elsewhere, and India is also a beneficiary. Even in uncertainties like budget and elections in India are now over, so India is a much stable investment environment for the investors as of now, as per experts. For more such news and views, keep watching ET Now.
If you like this video, then like, share and subscribe to ET Now.